Hey, everybody, it's Greg Harrelson here, and with Century 21, the Harrelson Group, of course, with my co-host Abe Safa, also with Century 21, the Harrelson Group. And we just wanted to bring another episode of the Myrtle Beach Real Estate TV to you. And, the Myrtle Beach Real Estate TV is just one of the commitments that we have to the consumer in our local real estate market. Make sure that we bring transparency and communicate the real data, what's really going on in the marketplace, in hopes that if you ever need to do anything or make any decisions with your real estate holdings, we just want to make sure that those are informed decisions. So, Abe, thank you so much for joining me again.
Hey, Greg. Yeah, it's been a couple of weeks since we've been on here. I'm glad to be back.
Yep. Yeah, and we got a lot to talk about. I know that there's you really did some deep digging on the numbers, so we can give everybody kind of an update as to where we are in the marketplace. And Abe and I always are. We say it often, we'll never try to predict the market. We may give you some opinions on how we're experiencing the market, but we don't have a crystal ball. But what we can do is share some facts with you. And I think when we look at the facts of what's going on, I think it's kind of obvious, the direction that we're heading into. So, hey, why don't you just go ahead and do, share with us some numbers, and then we'll have a little dialogue around it.
Yeah, there's a lot of news out there of how much the real estate market has been beat up over the last 6 to 9 months, meaning that less transactions have been happening since last summer.
Yes.
And I think nationally, that number is somewhere around a third. So since June or July of last year, maybe even May, somewhere around that point, at a national level and a local level, the number of closed sales, the number of sales happening month after month has been down somewhere in the range of 30 to 40% every single month. So what a lot of people coin that as a housing recession is what we've been into. So the national forecast has been, in 2021, we did nationally 6.5 million homes were sold. All through the wintertime, the National Association of Realtors has been forecasting somewhere in the range of 4 million homes sold. So that goes kind of hand in hand with what's been happening, about a third less transactions happening.
Let me interrupt you real quick. I remember you talking about this real estate recession.
Mm-hmm.
I don't know if it was a year ago, but you're bringing it up now. But you called this pretty early. Do you remember, like you said that in the last year, maybe down about 30%, right? Is there a number that when it goes down by I'm assuming a lesser percent, that the real estate recession starts coming into conversation? Because I have a feeling like there's a big difference between when we entered into the real estate recession and then that 30%. So that to me would have been a pretty deep real estate recession. Am I interpreting this correctly?
Yeah, I don't know if there's an exact number, and I'm not even sure if there's an official term for housing recession, right? But I just know as of June of last year, and again, it might have been late May, but I think it was June. We just started seeing the number. It's really when the interest rates doubled. All of a sudden, when we went from 3% to 6%, a lot of people called it a mortgage rate lockdown. What ended up happening was the market just pretty much froze, right? Buyers got sticker shock when their rates went from 3 to 6. Sellers all of a sudden got sticker shock because they didn't want to sell their home that they've got a 3% mortgage on and turn around and buy at 6%. So there was a lot of chaos happening from the summer all the way through the end of last year. And what ended up transpiring was, month after month, again, a third less transactions happening in the market. Hence the term housing recession.
Yeah. Okay. Well, thanks for that clarity. I just wanted to ask.
But looking at month after month, they've been down somewhere in the 30-35% range. When we look at March, single family homes in our market here again was down 35%. If you look at it over a 6-month period, it seems to be getting a little bit, that decrease seems to be getting less and less of a decrease. Now, what's going to happen eventually is, we're going to start running into, right now we're comping against spring of 2022, which is still very, very strong. Now, once we start getting into May and June and we're comping against weak 2022 numbers, then all of a sudden those negatives are going to disappear. When you comp into last year is what's going to happen.
Right. Yeah. So when you're talking about, I got it. Yeah. And that's, I've been a big proponent of not really focusing on year over year because of that, right? Especially the first quarter of this year, it's going to look like an absolute disaster. If we compare February of 2023 to February of 2022, it looks like Armageddon, right? Like the world's about ready to come to an end. But we're just now I think will it be April, or it'll probably be May's numbers that we can probably start to say these are really good comparisons, year over year comparisons. Is that where it'll be?
Yeah, I think it's going to be about May,
Okay.
maybe even June, but it could be May where we start seeing, okay, we weren't down that much, or maybe even possibly up, depending on what happens.
Yes.
Yeah.
Yeah. And I think what, like you said, in 2021, there was over 6 million sales, right?
Hmm.
And then we got to, at some point in the last 12 months, we were annualized, we were tipping all the way dropped down to around the 4 million. Is there a prediction right now? Did you say around 4.5 million, or what is the prediction for this year?
Yeah, I mean, the worst part is there was an estimate where we were on pace to do 4 million transactions for the year. That was back in the fall of last year. Now the forecast is somewhere around 4.5 million.
Hmm.
So it seems to be on the uptick, seems to be improving a little bit. But you and I were talking about this before we went live, and you asked a very good question, like, what does all this mean to the consumer? Like the number
Yes.
of transactions, especially at a national level, like what does that even mean? And it really doesn't mean much other than just the flow of transactions, things are happening, more buyers, more sellers out there happening. But the interesting thing is, throughout all of this, since June, we haven't had, I think there was only 1 month at a national level where sales prices actually went down, the average sales price. Here we felt it, I think, 1 or 2 months in the last 6 or 7 months, where it actually went down for a little bit, just a tiny bit. But if you look at March numbers, the average single family home sold for 371,000. That's 4.5% higher than what it did in 2022. So
And
that's the crazy
and
part.
that's still good 2022 numbers. That's
Yeah,
before
absolutely. Yeah, we're,
inflation went
we're
down.
still up, and that was a great number in 2022. But that's the
Yeah.
interesting part is, even with a third less transactions happening in the market, it hasn't hurt sellers out there. It hasn't hurt
Yes.
prices out there. And condos are actually up almost 10% compared to March of last year for the average sales price.
Yeah. I think there's a lot to say about also, there's been a lot of volatility, I believe, in the stock market. And, and I know sometimes when we see the stock market extremely volatile, have big swings, we tend to hear people say, you know what, I think I'm just going to take some money out of my securities and buy real estate. I feel like it's more stable. I'm not giving investment advice in that scenario, but I am telling you, this is what we hear. And I think that that's one contributing factor to a strong condo market, because contrary to what I've experienced in the past, a market like this would have seen a downturn in condo prices. But when they're talking about inflation and talking about a higher recession, a lot of times we'll see people kind of withdraw from buying what I call discretionary products, which is condos. And then demand goes down and prices go down with it. But we haven't seen that. And I would say some people moving money out of securities, investing in our real estate market. Population growth in our local market is growing. We're growing rapidly, so that's contributing. And then a lot of people are figuring out how to maybe get a little bit better return off of the rental income by doing the Airbnb, VRBO, kind of self-managing their property. So it's amazing to see the creativity of how buyers or investors are being able to make these investments work, even when there's some uncertainty in the economy.
Yeah, absolutely, Greg. Yeah, we're seeing a lot of that out there in the market right now as far as creativity. And look, the bottom line is, prices haven't gone down because inventory hasn't gone up. There's
Yes.
not a whole lot of options out there for
Yeah.
buyers still. So when you look at condo inventory, for example, which if you would have told me, 3-4 years ago that we're going to be down a third in transactions, okay, less buyers out there, I would have said 99% certainty that what that would have meant was inventory was going to grow. And
Yes.
then once inventory grew, prices were going to come down. But if you look, inventory hasn't changed in the condo market in the last 4 months. It's been stuck at 2.3 months supply for the last 4 months straight, 2.3 every single month. Housing, it's been stuck at 2.5 months, right? So it's not as crazy as it was back in whatever we bottomed out when there was less than a couple of weeks of supply of inventory, right? And then all of a sudden it spiked up to around 2 months supply. Ever since then, though, it's kind of just been level. It hasn't
Yeah.
moved. And that's really interesting to me, seeing that there's just not a whole lot of inventory hitting the market.
Yeah. Yeah. I mean, if we see, again, this is an opinion. I don't want to make predictions, but, my experience says like if we see that, say the residential, I'm just looking at some numbers you shared, the residential numbers of inventory 2.5 months and then the condo 2.3. If we start to see that dip into the 1.5 months, again, then we might see a little bit of a price increase.
Right.
That's likely to happen. If we start to see this thing dip over or increase over 3, maybe 3.5, then that'll be very interesting too. That'll be very telling. Like if we see that in the spring, which there should be a lot of properties coming on the market in the spring, historically that's the case from a seasonality standpoint. And if we see that thing getting into say 3.5, then all of a sudden that's gonna raise one of our eyebrows, and we're probably gonna say, okay, let's really pay attention to see how is this affecting days on market and pricing. But I think one thing we don't always agree on everything, or at least we have different views, right?
Right.
I
Yeah.
think one thing that we will wholeheartedly agree on is that if the inventory level stays where it is, this is probably our normal. If the inventory level goes down a little bit more, we may see a little bit of run on pricing. Now we'll see what happens to interest rates, whether or not that moderates it and depresses it. But if everything else stays the same and inventory goes down, we should see price bump up just a little bit. We're not talking about massive. You're not going to be able to buy today and flip tomorrow just because of that little bit of appreciation, but it would be positive versus negative. And then if we see the inventory go up probably by another 1 month, add another 1 month, then that might be the first sign of a little bit of a softening. But I don't know where the heck it's going to come from. like we're not going to our inventory. I don't believe our inventory is going to increase because more sellers are going to come into the market. I think that what would cause our inventory to increase is if less buyers came into the market. I believe that's what would, but I'm not predicting either one of those, but I think that's what would have to happen in order for that to happen. Thoughts on that?
Yeah, yeah, I agree. I agree on the first part of what you said that if
Okay.
inventory went up, say another month to 3.5 months, that could put a little pressure on the prices to drive them down a little bit. And if
Yeah.
it actually went down 1% to 1.5, I surely think that that'll drive prices up.
Yeah.
The second part, it's not that I disagree with. It's just it's so hard to tell. Like, yeah, where is the inventory going to come from? There's not a whole lot of people leaving the area just selling their homes and moving.
Yeah.
Right? There's people making changes. I don't see how, when you look at interest rates, I think we've peaked, right? Barring something crazy happening like another bank squeeze like we had with in
Silicon
San
Valley Bank.
Francisco. Yeah, Silicon Valley Bank. Unless we see something happening in the banking industry that all of a sudden shakes up the economy, all of a sudden interest rates go up again. If the interest rates have already peaked and they're on their way down or at least leveling off, I don't see that hurting demand more so than it has already.
Yeah.
Yeah, I don't. I think that demand is still going to be there. But again, there's just so many variables. It's hard to predict. The one thing that we know for now is that this kind of been pretty stable the last 4 or 5 months as far as the transactions. It seems to be softening up, getting a little bit better. Inventory is not going anywhere. Prices are definitely not going down, but they're not like skyrocketing anymore like they were. It's just so many variables out there, Greg. We have to kind of look
And
at this.
I think we actually do agree on that second point, and I think I'll restate it a little bit differently. I actually think something completely out of the blue that we do not see coming that would cause the buyers to slow down their purchasing is what it'll take. But I actually, like you, I do believe that interest rates are stable. And, my banking friends on a local level tell me that they think, hey, hold tight another couple months, maybe 6 months, these interest rates are going to come down. And like they're saying that because I was buying some property and a commercial property, and that's what they were telling me, and that's what they're feeling. Of course, they're not the ones that said it, but that's at least kind of like the conversation that's on the street. So I agree. I think in the end, I think both of us, or at least I think out of all this, I don't think that there's going to be any massive change either way that's going to take place. We may be stabilized where we are right now. Something can change in a month, but there's nothing, there don't seem to be any numbers that say, hey, you better do something right this second, or else you're going to regret it. I don't see that type of evidence right now.
Yeah, I agree. I agree. I think the next 2 months will create
Yes.
some clarity, because April and May are usually big listing months where a lot of properties do hit the market. So I'd love to see what happens over the next 4 to 6 weeks if that goes up, and then also monitoring the mortgage rates every single day.
Yeah.
If that drops below 6, that could have a boost in buyer activity.
Yeah.
We'll see.
Okay. Well, sounds good. Well, thank you so much for bringing the hard data to the conversation. For those of you that, if you are thinking about buying or selling, Abe and I would love to help you, and would love to earn your business. That's one of the reasons why we do the Myrtle Beach Real Estate TV, is just kind of bring you all good information, introduce ourselves to you. And if you have any questions, even if you're not buying or selling, just ask us questions. We get questions all the time about the market or a specific building or community, a neighborhood and whatnot. If you want to know the values, what's going on, we'll surely give you that information. There's our contact information. Abe, thank you again, and we'll connect again next week.
See you next
Bye,
week.
everybody.
Bye.